All right, let's dive into today's currents. Imagine you're, at the helm of a ship navigating this huge ocean, and the waters are just constantly shifting. Sometimes calm, sometimes, well, unpredictable.
That's a great way to put it.
Yeah, it feels like a perfect metaphor for the market today, September 10th, 2025, pre-market. There's just a lot happening out there, a lot of movement.
Mm-hmm.
And we've got a treasure trove of insights here to help you chart your course.
Hopefully.
Our mission in this deep dive is really to cut through the noise. We've got a comprehensive market briefing, and we're going to dissect multiple perspectives on key assets. The usual suspects, SPY, Tesla, TSLA, and the Bitcoin ETF.
Right.
The goal is simple. Give you a clear, actionable understanding of what's really driving things this morning. We'll blend technicals, sentiment, and, crucially, risk management.
And what's really compelling, I think, is that while the big picture might seem, dynamically bullish, there are some very interesting divergences, nuances simmering just beneath the surface. We've been digging into detailed reports from DODA's V 2.0, that's our advanced data platform, Apex protocol for quant signals, and a broader market scan.
Bringing it all together.
Exactly. Bringing all these data points together. We're not just highlighting what's happening, but critically, why it matters for your trading decisions today.
Okay, so let's start there with that big picture.
Mm-hmm.
The dominant market sentiment as we kick off this deep dive.
Mm-hmm.
Our sources are pointing towards an overall market regime that's, well, dynamically bullish this morning. Pretty strong consensus, actually.
Yeah, 3 out of 4 indicators pointing up.
3 out of 4, yeah. Confirming upside potential for September 10th. Even before the opening bell. And this positive tilt seems largely fueled by that persistent resilience in tech.
Tech just keeps going.
It really does. And stable expectations around the Fed don't hurt either. And notably, volatility. The waters seem calm.
Yeah, the VIX is showing a calm signal at 15.04.
1504, okay.
Which is, comfortably below its 10-day moving average by about 2.33%, and it's sitting in the 40th percentile. So, yeah, it feels like smooth sailing on the surface.
On the surface, right.
It does, and that dynamically bullish signal, it's certainly powerful. However, if you look at the broader tapestry of sentiment indicators, it gets a bit more complex.
So.
Well, for example, while things feel calm, the CNN Fear and Greed Index, sitting right in neutral territory at 54.
Okay, neutral.
The Crypto Fear and Greed Index, also neutral at 49. But then, interestingly, the AAII survey, tracking individual investor sentiment, that actually leans bearish.
Really? Yeah.
Yeah, 42.5% of respondents expressing bearishness. So it kind of begs the question, how do we reconcile these conflicting currents?
Yeah, I suppose so.
And what's also critically important is the low implied volatility, or IV. SPY's IV rank, that's how current IV compares to its history over the past year. It's exceptionally low, like hovering between the 7.11% or 7.2% percentile.
Yeah, that is low.
Very low, which makes options premiums relatively cheap, right? Creates interesting opportunities for directional plays, but it also signals potential for volatility to expand rapidly. If some big catalyst hits, it could catch people off guard. It's a bit like a coiled spring.
A coiled spring. Okay, that makes sense. So overall bullishness, but individuals are cautious and volatility is super low, potentially ready to pop.
Exactly. It's a testament to why we need to look beyond just one indicator,
Absolutely. And speaking of specific indicators, here's where it gets really interesting as we zoom in on our key assets.
Right.
We're seeing two clear leaders in this bullish environment, kind of like well-powered ships forging ahead, and then one intriguing outlier that's battling some unique crosswinds.
Okay.
Let's start with SPY, the S&P 500 ETF, our steady climber. Current pre-market prices around, $650.20 to $651.55. Closed yesterday at $649.95.
Yep, steady climb.
And the signal for SPY is undeniably strong. Bullish. It's trading above both its 50-day and 200-day simple moving averages, the SMAs.
Key long-term indicators.
Right. Unequivocally confirming that sustained uptrend. More specifically, it's up plus 0.93% versus its 20-day MA and ton plus 2.47% versus its 50-day MA, and positioned at an 89% Fibonacci position.
High in the range, strong momentum.
Exactly. And these Fib levels often act as, critical support and resistance. Being near the top shows that bullish momentum. So this setup, it opens up clear call bias opportunities. Our sources suggest an entry above $656.91. That's 127.2% Fib extension level. maybe with a $657 strike, or even as a $655 call expiring September 19th.
Okay.
SPY's risk-reward score, the RRS, it's at 77. Favorable outlook. But no asset moves in a vacuum, right?
Right.
We're watching upcoming events, medium impact catalysts potentially, the ECB rate decision, and that big Apple event everyone's waiting for.
And a crucial detail for SPY, something that can really amplify these moves, is the dealer positioning.
Okay, what's that telling us?
Our sources indicate SPY dealers are currently short upside convexity. Now, that's a bit technical.
Yeah, break that down for us.
In simpler terms, it means these dealers have sold options that would profit big time from a large upward move in SPY. So if SPY does break out to the upside, their hedging activity, right, their need to buy back those options or hedge their exposure, it could actually create this powerful feedback loop.
So they end up buying more, pushing it higher.
Exactly, triggering a cascade of buying, leading to an even sharper, faster rally than you might typically expect. It's like having market mechanics on your side if you're bullish, a potential accelerant.
Interesting, like adding fuel to the fire.
Precisely. And we're seeing a high confidence level on this, 4 out of 5, with roughly a 68% probability SPY hits or exceeds $650 by September 12th.
Wow, okay. That short upside convexity sounds like a powerful factor. But how reliable is that signal in practice? I mean, are there times when that amplification might not happen, or even reverse?
That's a fair question. It's generally quite reliable in these specific conditions.
Yeah.
You know, low implied vol, clear directional breakouts because the dealers need to rebalance their books just becomes urgent. However, a sudden, unexpected external shock, a black swan event, something completely out of left field, that could certainly disrupt it.
Yeah.
Because it would likely cause a massive surge in volatility that just overwhelms those mechanics. But in a more, let's say, typical data-driven breakout, yeah, it's a significant factor to watch.
Good to know. Okay, let's shift gears. Let's talk about the crypto leader, the BTC ETF. Specifically, the Grayscale Bitcoin Mini Trust. This one feels like a momentum driver, definitely, like a high-speed cruiser.
Yeah, it's got momentum.
Current pre-market price is around, what, $49.79 to $50.30 for the ETF. Underlying Bitcoin, though, impressive, $111,783.93.
Still climbing.
Closed yesterday at $50.10. Yeah. The signal here, unequivocally momentum bullish. It's trading above its 21-day EMA, that's the exponential moving average, by a solid 2%. And it's sitting in the 100th percentile of its 30-day range.
Top of the range, very strong.
Clearly tracking Bitcoin's steady climb.
Yeah.
And largely fueled by a powerful resumption of positive ETF inflows.
Those inflows are key.
Big time. So opportunities here also have a strong call bias.
Yeah.
Entries suggested above $110,190 for Bitcoin itself. That's a key EMA threshold, maybe targeting a $112,000 strike.
Okay.
Or for the ETF, a $50 call expiring September 19th, with a volume spike above $50 as a specific buy trigger.
Got it. Volume confirmation.
Exactly. And the catalyst, those positive inflows resuming. Approximately 120 BTC on September 9th alone, noted as a high-impact factor.
Definitely a tailwind.
The RS for the BTC ETF is 80, moderate volatility, valuation close to NAV, high catalyst impact. Seems pretty positive.
And this is where it gets truly fascinating, that divergence we talked about.
Right.
Given the mixed sentiment overall, why is BTC showing such strong leadership? Why is it such a powerful momentum driver right now?
Yeah. What's the insight there?
The novel insight from our sources is that BTC ETF inflows and low volatility are actually leading TSLA and SPY amid the pay package discussions.
Leading, wow.
Yeah, suggesting crypto isn't just riding the wave, it might be actively creating it. Acting as a true risk-on bellwether, potentially signaling broader market appetite for risk, even despite those other cautious indicators.
So crypto's out front, pulling the market.
It seems that way. It's a key dynamic to watch. Our sources even quantify a potential 5–6% upside in 30 days if Bitcoin can stay above $51. It's really carving its own path.
That is significant. BTC potentially signaling broader risk on, even when other things look hesitant. Really underscores its evolving role, doesn't it?
It certainly does.
Okay, now let's talk about the outlier. The asset battling those unique crosswinds. TSLA. Tesla Inc.
Ah, Tesla. Always interesting.
This one feels a bit like a speedboat hitting, I don't know, a patch of rough water, trying to decide whether to ride the wave or turn back.
Good analogy.
Its current pre-market price is hovering around $348.78 to $349.50. Closed yesterday right at $348.75. Now, here's the interesting part. While it's up, multiply plus 2.5% versus its 20-day MA and plus 6.74% versus its 50-day MA, it's also stuck between the 51.8% Fibonacci retracement levels.
Which our DOTA system flags as bearish.
Exactly. DOTA's V2.0 flags that as a bearish signal. Being trapped between those fib levels often indicates uncertainty, maybe a potential downturn. It's a really complex picture.
Conflicting signals right there.
And then valuation. There's a notable discrepancy. One source says PE around 206, another says 137.
But both agree it's high.
Both agree it's high.
Yeah.
So TSLA's valuation is playing a bit of a shell game, it seems. And catalysts. A real mix.
Always a mix with Tesla.
You've got potential upside from that $1 trillion pay package, estimated 20–30% upside if it passes. But then also the bearish factor of robo-taxi delays. That always looms large.
True.
So for opportunities, DOTA's V2.0, clear peak bias. Recommending entry near $346.27, that MA fib confluence point, with a $343 strike.
Okay, bearish technical signal driving that.
Right. An Apex protocol also suggests a TSLA put option, $340 put September 19th, either as a hedge or a primary position.
A hedge makes sense given the mixed signals.
Yeah. A bullish call, like a $355 call expiring Sep 19th, is only recommended if there's a $350 breakout or a clear reclaim of those fib and MA levels.
So, needs confirmation first.
Definitely needs confirmation. TSLA's RRS is 60. Lowest of the three assets. Medium high volatility, high valuation, mixed catalysts. Reflects that uncertainty and volume. Also noted as 53.59 million.
Which is below average.
Yeah, below its 20-day average of about 80 million. Suggests a lack of strong conviction either way.
And this is just a prime example of why getting multiple perspectives is absolutely vital and, why agility is so key today.
How so?
Well, on September 9th, just yesterday pre-market, TSLA was actually showing a bullish signal. It had a call bias.
Really? Yesterday?
Yep. But by this morning, September 10th pre-market, it dramatically shifted, flipped to bearish with a put bias.
Wow. Quite a shift in 24 hours.
Exactly. What this rapid flip really tells us is that market data is a living, breathing thing. What's true one day, even pre-market, can totally reverse the next. Underscores the absolute need for real-time data and, frankly, swift action.
No kidding.
While Apex Protocol grades at 3 hold consider buying, overall acknowledging the strong free cash flow and potential catalysts, the neutral technicals and low volume indicate no oversold buy yet. That makes the bearish technical signal from DOTAs really significant, demands serious attention.
So even if you're holding long-term, that shift is a warning sign for the short-term.
At the very least, yeah.
Yeah.
A signal to be aware of short-term vulnerabilities, absolutely.
So TSLA really is the perfect example of needing to be nimble. It's almost a microcosm of the whole market right now, isn't it?
It really feels that way sometimes.
Okay, so given all this movement, these conflicting signals, what does it all mean for your strategy? The sources we've looked at, they clearly outline a path forward, but there's a heavy emphasis on managing risk, especially with assets moving in different directions like this.
Risk management is paramount here.
Absolutely. For primary opportunities, the recommendations seem quite clear. For SPY calls, specifically, a SPY 640-676. Entry above $650.33, plus confirming volume. T1 is $664. T2, $668. Use a trailing stop of 25%, hard stop, $647.
Clear levels.
For BTC calls. Entry above $110,190, that EMA threshold we mentioned. Strike $112,000 for Bitcoin. Suggested size 3%.
Okay.
And for TSLA.
Okay.
Strategy is clearly focused on TSLA puts. Only flip the calls if and only if those FIB and MA levels are definitively reclaimed. Means that confirmation.
Right, wait for the signal change.
In terms of portfolio allocation, our KSC model that's designed to blend stability, growth, potential upside suggests a breakdown like this. 40% SPY for stability, 35% BTC ETF for growth momentum, and 25% TSLA for that higher upside potential, albeit with a higher risk.
Okay, that allocation makes sense given the signals. But this brings us to the critical question. How do you manage the inherent risks, especially with these specific directional trades when the market's throwing mixed signals?
Yeah, that's key.
Our sources are very, very clear. Strict, disciplined risk management is paramount. Non-negotiable, really.
What does that look like specifically?
Recommended base position sizing is 15% for options trades overall, but with a maximum of 2% or $2,000 allocated per individual trade. Keep those bets sized appropriately.
Okay, 2% max per trade.
And crucially, tight stop-loss levels are outlined for each position. SPY at $647, TSLA $343, BTC $110,190. Know your exit before you enter.
Hard stops.
Hard stops. And for options specifically, a 50% premium loss stop loss is universally advised. If your option premium drops by half, you get out. Don't let it go to zero.
Cut losses quickly. Okay.
And beyond individual stops, you need to be watching the VIX vigilantly. Our contingency protocols say if the VIX is in that 30th to 70th percentile range, you should already be cautious. But you must hedge instantly if VIX spikes above 17.5.
17.5 is the trigger line.
That's your early warning system for a potential sentiment shift. There's also a clear alert for overall portfolio P&L, a negative 5% daily loss or negative 8% overall drawdown. Those are critical thresholds to stop, reassess everything.
Got it. Portfolio level stops too.
Yes. And finally, a significant point for critical thinking, and it really highlights the complexity today. Our sources flag data discrepancies.
Discrepancies. And what?
In SPY's 14-day RSI, its RSI momentum, and even trading volume. For instance, one source reported 65.45 million shares for Sep 9th volume for SPY. Another said 20.23 million.
Wow, that's a big difference.
It is, and it underscores why independent verification is recommended. It's just a powerful reminder that even with sophisticated tools, you have to be aware of data limitations. You need to continuously cross-reference information to build the most accurate picture you can.
That's a really critical point about data discrepancies. So what's your top advice for listeners when they actually encounter conflicting figures like that? Beyond just independent verification, what's a practical step they can take in their daily routine?
That's a great question. I think the most practical step is to establish a hierarchy of your trusted sources. Figure out which of your tools or data providers has historically been the most accurate for a specific metric, like volume or RSI, and use that as your primary reference.
Your go-to source first.
Exactly. Then, when discrepancies pop up, pause. Don't just react. Compare against a third independent source if you can. Sometimes that's just reporting delays or maybe different ways they aggregate the data.
Right. Innocent explanations?
Could be. But sometimes it signals a deeper issue that actually needs investigation before you trade on it. The key is never blindly follow a single data point without cross-referencing, especially on high-stakes trades.
That's invaluable advice. Establish your hierarchy, pause, cross-reference, especially now in this data-rich but sometimes contradictory landscape. Okay, well, we've just completed a pretty deep dive into the pre-market landscape for September 10th, 2025.
We covered a lot of ground.
We did. From those dynamically bullish signals pushing SPY and BTC forward to the intriguing bearish divergence we're seeing in TSLA, we've explored how low volatility can create unique opportunities, but also really reinforce how absolutely crucial robust risk management is, for successfully navigating these constantly shifting waters.
Exactly. And if we consider the broader implications, the interplay between those highly correlated bullish assets like SPY and BTC, and then the lagging, more speculative TSLA, it truly showcases what we call the amplification matrix at play.
Amplification matrix. Explain that a bit.
Well, for instance, our sources indicate SPY and BTC have an upside synchronization, 1.5x move if breakout, meaning a strong breakout in one can potentially pull the other along with even greater force, like they feed off each other.
Okay, positive feedback loop.
Right. But conversely, TSLA could act as a 1.3x momentum drag if reversal fails. It could potentially pull down broader sentiment if its struggle continues. So you have these push-pull dynamics.
No drag, okay. Makes sense.
This dynamic requires a really nimble approach, always being prepared to adjust your sails, as you said earlier. So as you, the listener, consider these market movements and the strategies we've discussed, maybe think about this. Okay. In an era where market complexity is just ever increasing and signals can diverge so sharply, how might the sheer volume of available data, how might that become both our greatest asset and maybe, just maybe, our most significant challenge to overcome?